India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Wednesday morning, and it's not a pretty picture from overnight as far as the U.S. market is concerned. By the way, just FYI, it's yesterday's news, but it was the 14th straight positive close. We ended 1 point higher after all that adjustment of the last 30 minutes of price action. We're coming to you from the CNBC TV 18 Motilal Oswal studios. I'm Prashant, with me my colleague Surabhi and Nigel. Guys, hi, good morning.
Hi guys, good morning.
Morning.
I woke up and in the morning I was thinking about what you said just yesterday, or I think, the first trading day of September, that it's a wishy-washy month.
Yeah.
And bam, we wake up this morning to an absolute sea of red out of nowhere.
Well, that's right. In NVIDIA, right? I mean,
Yeah.
who would have thought in a single trading session loses $300 billion of market capitalization after the big run that we're seeing. So that's a bit of a sticky spot, and that's clearly the whipping boy overnight.
I mean, all kinds of reasons, right? I mean, in terms of what's going on. NVIDIA is a big one. I think the biggest, single biggest sort of mover, because it's got so much influence and weight. So, but let's start by telling you the price action from overnight, because I think that's the dominating driver. You have S&P, which was down about 2.25%. Nasdaq was down about 3.25%. So these are large cuts. I could sort of have put in the Russell 2000, which is the small cap index as well. That's down about 3.5% as well. So, pretty large cuts. Now, there is no sort of one big smoking gun which you can sort of pin all of this sell-off to. It's basically a bunch of things, and I'll just run you through a few. So you had the ISM manufacturing data out of the US which came through. All three components were basically weak, were in the contractionary zone again, not for the first time, but once again. Specifically, you look at something like new orders. New orders was down once again, and I think it's the lowest since the middle of 2023. Essentially it's a forward-looking part of the ISM manufacturing data, which kind of tells you what the business momentum, etc., is looking like. And remember, we're in that phase of the market where bad is bad, and people are trying to assess how, is the US economy weakening faster? Will that basically mean faster rate cuts? So it's not, bad is good kind of a phase in the market that we're in. There is seasonality. Now, I think, I mentioned this, as Surabhi said on Monday, September typically is a tricky month, but more so because you're going into an election. So if you look at the S&P 500 or the Nasdaq for that matter, and you look at what September looks like, but you separate the years where there is an election and the other years, there is a very clear kind of divergence. Election years, starting sometime August all the way to the November election phase, the market is down. It's a very clear, pronounced kind of trend. This is going back from about 1980 in the 80s all the way till 2023. So, and of course, otherwise, ex the election years, September is not really that bad a month, although it's not great. So I think there is a seasonality aspect of it, but I think it's well advertised. I heard, some essentially saying that, well, we'll be down, but it's a buy the dip and then we'll move up. It's almost as if, some of the commentary seems like it's straight out of a book. It doesn't happen like that. These are markets and sort of dynamic environment. Now, there is the other thing as well, right? Buybacks from US corporates is perhaps the single biggest technical factor in the US, which supports markets, which supports equities. Guess what? You're entering a bit of a blackout period starting, I think, the 13th or the 14th of September, pretty soon, ahead of the third quarter earnings season in the US. So for a while, you will not have that powerful factor. And then I come to the NVIDIA sort of aspect as well. It's stock down about 9.5%. If you look at the entire semiconductor pack within the US market, I think that was down about 7% or so, but largely thanks to NVIDIA. There is, of course, this news headline which got a fair bit of play, which is the Department of Justice subpoena in escalating antitrust investigations. But there are other things as well. For example, there is a news item which says that OpenAI is working on their own chips. And a couple of other things as well. So after earnings, there was a bit of a disappointment which got bought into. But after that, you basically have a pressure coming through here. I'd like to add that NVIDIA now is if that 20% fall is a bear market, NVIDIA is in a bear market. From the highs, the recent intraday highs, NVIDIA is now down about 24% or so. It's sort of blown through the 20, the 50-day moving averages as far as technicals are concerned. A few other things. This is again price action. CBOE WIX with the volatility index in the US that went up some 33% to about 20.66. The 10-year was down about 7 basis points to 3.83. You had oil prices down 5%. And we'll talk more about this. There were, talks that Libyan production could sort of come back on, etc. But maybe that is the reason why more oil in the market, so prices down. But I think there was also the element of general sort of risk-off, which was playing a part. Just to circle back to levels here, I think you keep a keen eye on supports here more than anything else. We've gone up for 14 days in a row, although yesterday was barely up. Support comes in at the 40 hourly exponential average for the Nifty, which is 25,164. That's the first level. You break that and you stay below that, then you will start to look at retracement supports. Retracement of what? The retracement of the recent rally from the lows to the new high that the Nifty made. So the first number is 24,783. I mean, it's far off, right? 24,800 roughly. Keep that in your mind. That's a 38% retracement of the rally that we've seen. Then I come to the Nifty Bank. Here, the support comes in. The first support comes in at the 40-day exponential moving average, which is 51,003. We left off at about 51,700 as of yesterday. So it's basically less than about 1.5% away from where we left off things. And then we'll again look at retracements, etc., because the rally on the Nifty Bank has been much weaker as compared to what we've seen on the Nifty. Stay out of the way. Let the market settle. It is possible that US is in for a little bit more in terms of two-way price action. A little more pressure is also possible. So no need to be brave and buy every day. And maybe deleverage as well. I mean, if you're heavily exposed on the F&O side or the option side, reduce that and focus on the portfolio more than anything else. So 160 points lower is what the GIFT Nifty is indicative of in terms of the dip that we will begin the day with. Surabhi.
Well, absolutely, Prashant. So pretty much covered it. Just to add over here, that safe haven sort of sentiment is playing out even on the currency side. The yen, for instance, this morning is higher versus the dollar. So that's sort of an add-on that's continuing. Just a point on the manufacturing data, because there were two different sort of prints that came in on manufacturing, and both were pointing to weakness. So basically, both were lower than market expectations. One was the ISM manufacturing index, which came in at 47.2. Which is actually an improvement over July, and this is the other one. This is the, that's the ISM one that I'm talking about. 47.2, which is better than July, which was 46.8, but the expectations were higher, and those expectations were not met. So that was with the ISM. The problem with the, S&P Global Manufacturing PMI, this is the US PMI that S&P Global puts out. That number was at 47.9, which is a sharp decline from the previous month and also lower than expectations. If you go by this index, then the manufacturing data is at an 8-month low. The index is at an 8-month low, and that's what pretty much was playing out. And a lot of this issue with NVIDIA that's playing out on Asian semiconductor stocks or the companies that are in the semiconductor supply chain this morning, and a lot of them come from, for instance, Korea, Taiwan. So all those markets are reeling under pressure. If you pull up most of Asia right now, there's not been much of a recovery. About 3.5% down in Japan. Hong Kong's opened out. It's about 1.5% there as a week as well. Not much to add really in terms of cues here. Just to talk about the numbers. FI's net buyers to the extent of 1,030 crores. Domestic institutions were also buyers, but for a change, both were on the buy side. DIIs were buyers to the extent of almost 1,900 crores. In terms of individual stock action, I'll just restrict it to pointing out that GIC, and this is a news break. I mean, Yash was telling us, and this finally became official, the government will be divesting close to 7% stake in GIC. And for the non-retail participants, it opens out today. For retail and employees, it opens out tomorrow. Watch out for this. And then supply is going to be in focus. Not that it has too much of a bearing on the stock, but after many, many years, someone who's seen as perhaps the father of the Indian pharmaceutical sector, Mr. M.K. Hamid, he is going to be, putting down his papers. He's resigned from the post of vice chairman and non-executive director because of age and health reasons. And his son, Kamil Hamid, is going to be joining as non-executive director from the 1st of November. So it's the end of a long era glorious innings of Dr. Y.K. Hamid in terms of his active corporate life. But I guess, all that aside, it's global, and we need to brace for the storm and how we get through the first sort of that opening gap and what happens from there, I guess.
Well, that's right. The weak global Q as well. They are going to put a challenge to the Nifty's 14-session winning streak. And by the look of it, well, we may not see the 15th, but let's see. The recency bias tells us that you need to buy the dip. So let's see whether or not that works out even in today's trading session. The Nifty Bank, that's going to be the key for me today. It plays out the weekly expiry, and yesterday it had a bit of a breakout moment towards the end of trade. The last 60 minutes belong to the Nifty Bank, so we'll keep an eye out on that one. The bulls could turn to the Nifty Bank in today's session. One positive is crude oil prices have moved to its lowest levels all the way since December, which will support select companies like the paint companies, which I'll get to in just a bit. How is positioning on the index futures? Well, the FIs, they are net long. The long positions are at around 70%, which means the shorts are at around 30%. And the clients, well, they are net short, and they have their short positions at around 60%. So both of them, as we've been mentioning, they're opposite ends of the spectrum. And normally we have seen that the clients get it right. So I think maybe a bit of a pullback or some consolidation is what we're bracing for just in the near term. The PCR had gone out of whack a couple of sessions ago, went to around 1.5. It's cooled down to around 1.2. So that's more or less in the middle of that broad range out there. No big movement overnight as well. Well, the put writing, that did continue yesterday, and those strikes are going to be in focus today as well. So the 25,200 put in particular, that saw a lot of writing in yesterday's trading session. Roughly around 50 rupees was the premium out there. So looking at the options data, I'm giving you two support zones. One is the one that at around 25,100, 25,150, crucial level. This one, we're going to be starting off closer around this 25,100, going by the GIFT Nifty, but you want to end above this level. So that's the important mark. And, going further down, then you're looking at the 20, the 50 DMA that comes in this vicinity of around 24,500 to around 24,700. But the Nifty Bank, as I mentioned, it had a breakout moment yesterday because you had, you had both ICICI Bank as well as HDFC Bank that ended at the high point of the day. And that's why it crossed that 50 DMA on a closing basis. The level to look at based on the options data, based on the technicals, in today's session is 51,250. It plays out the weekly expiry, and the bulls could very well turn to the Nifty Bank for today's session. As I said, crude oil prices have pulled back, which means that paint companies that in the last 1 year, we talk about the markets being in a world of their own. Well, paint companies are virtually unmoved because of the dynamics of the paint sector. You have a new entrant out there. So both these names are something that I'll focus on. Lower crude prices normally means better, gross margins for them since prices as well have moved up. So maybe we look at both these two names.
Well, absolutely. A big 5% drop as far as oil is concerned. So some of these oil sensitives usually typically make a bit of a move.